The companies who would survive the AI downfall with the least amount of damage would be first, the engineers. This includes the like of Larsen and Toubro. They're the backbone of data center construction in India. Whether AI is hyped or not, India needs physical data centers for sovereign data and 5G. So L&T, whether it falls 20% or 30% in the fall, will come back stronger. The second is the power providers, Cummins India and Hitachi Energy. AI data centers require about 3 times more power and cooling than traditional ones. These companies provide the massive generators and grid equipment that have no alternative. Then we have the designers like Tata Elxsi. Their work is an embedded AI which is integrated into physical products rather than just chatbots. This revenue is much stickier. But the biggest victims of this bubble, which are at the highest risks, are stocks that have priced in 10 years of growth in 1 year. If the hype dies, their P multiples will collapse. For example, pure play cloud or GPU providers like E2E Networks. They've been multi-baggers, but at a P of 137, it is beyond expensive. It is purely based on the NVIDIA GPU clusters. So if the bubble pops, they go down with it. While the business is real, a cooling AI demand would hit their utilization rates immediately and sharply. Small cap AI themed hardware stocks that recently rallied 20% just on the NVIDIA partnership news like Orion Pro Solutions or small electronics assemblers would see the sharpest price corrections. It has already seen a massive correction, but there is space for another huge leg of downside in stocks like these. IT services with high testing exposure like Wipro or Infosys that rely heavily on manual testing and maintenance are at risk because AI tools such as Anthropic's latest are automating these specific revenue streams first. Instead, I would buy a Persistent Systems. Unlike the Big Four, Persistent is faster at adapting to AI-led engineering. Analysts at ICICI Direct already view them as a preferred name due to their strong AI-led service pipeline. Another company to accumulate would be NetWeb Technologies. They are India's only major high-end server manufacturer. On Feb 18, 2026, they launched the world's smallest AI supercomputer. If this stock falls 20 to 30%, it is a prime accumulation pick because India's sovereign AI mission ensures long-term government orders. Kaynes Tech is another one. As India's semiconductor and electronics manufacturing leader, they are the foundry of India. A global AI dip would give you a better entry point into a company that is critical for India's 2030 semiconductor goals.